If you are watching this program and you're trying to figure out should you invest in the Indian stock market now, my suggestion will be that you should, provided you focus on the large cap end of the market, where I believe valuations are sensible. Small and mid caps are looking at being invested. So our largest portfolio is our flagship portfolio, consistent compounders. So consistent compounders has 16 stocks in it. The market cap is around 40 billion, $45 billion. These are large, chunky companies such as Asian Paints, HDFC Bank, Bajaj Finance, Divi's Lab, and I'm sure your viewers will be familiar with these names. These companies have compounded profits at a steady rate over many years, but in the last 3 to 4 years, their share prices have gone nowhere. As a result, in several of these cases, these companies are available at decadal lows. So, for example, HDFC Bank, I think, is available at 12 times forward, and we've obviously backed up the truck into companies like, say, Asian Paints. You're flashing on the screen. We have backed up the truck into companies like HDFC Bank, Asian Paints, Divi's, Bajaj Finance, because it's not too often that you'll get companies of this quality 20% plus profit compounders. So we don't have ICICI in a flagship portfolio. We have a financial services portfolio where ICICI Bank has a place as well. I think, as is well understood, so that under Bakshi Saab, under Sandeep Bakshi Saab, ICICI Bank has in the last 5-6 years posted sparkling numbers. We think it's well placed to continue benefiting from the ongoing strength in the recovery. City Union Bank, I've known the bank for a long time. I've been in India for 16 years. I've known UBK and Dr. Kamakodi for the bulk of that time. We as a team have understood for a long time that their franchise in Tamil Nadu, in Andhra and Telangana, their franchise in that part of the world, very prosperous part of the world, their franchise is second to none. They have incredibly loyal customers on both sides of the balance sheet. And therefore, after a few unfortunate episodes in 2022 and 23, when the stock went down to 1 times book value, it went down to 1 times price to book. We thought it was a bargain to be had. So we went to Coimbatore, we went to Tamil Nadu, traveled around the interiors, met not just City Union bankers, but we also met bankers from Kotak Bank, ICICI Bank, and figured out that City Union Bank's franchise is tip-top. Franchise is holding on nicely, but the market has punished it for a bunch of unfortunate events, which we think were episodic. And hence we ended up on City Union, I think 5 or 6 months ago, and it's worked out nicely for us since then. We hope to be able to make more money on this in the years to come. I think fair value for City Union will be somewhere around 2 times price to book. So long way to go on this company. Hopefully we'll be able to make at least 100% return on this over a 3-4 year period. Narayana Hrudayalaya is the preeminent hospital chain in Bangalore and in Kolkata. Again, as our take on India is, as we get older, richer, sicker, as more Indians buy health cover insurance, as more and more Indians buy, either they get corporate health cover from their employers or they buy health insurance themselves. Private sector hospitals will see a rise in their business. Amongst the various listed private sector hospital chains, we believe this is the one with the strongest moat around looking after patients, generating a decent ROC, reinvesting that ROC in the booming markets of Bangalore and Kolkata, and compounding wealth for us. 2 parts of the investment, as we were discussing a few minutes ago. There is a capex recovery in our country. In many different ways. CG Power, which Tube owns 58% on, should benefit from the capex recovery. Secondly, Tube has an engineering division which supplies the auto industry, which supplies the manufacturing sector, makes steel tubes and various auto anchors, fine blanked parts. That should be a natural play again on a light industrials recovery, especially in South India. And the final and perhaps the most understood aspect of Tube, the EV businesses that they have seeded, 3-wheelers, trucks, and tractors. We believe all 3 of them have the potential to become multi-billion-dollar franchises. And therefore, if you put the totality together, CG Power, engineering, auto anch, and the EV businesses, we think it's a very powerful play on a capex recovery in India. The governmental efforts to revive rural India, and in a way, a natural economic revival in rural India on the back of the after effects of COVID fading away, a good monsoon kicking in. So Godrej Agrovet has a dairy business, but their largest interests are in crop protection, herbicides, fungicides, and they have an oil palm business where they incentivize farmers to grow oil palm, and then they crush the oil palm to produce palm oil, and then they sell that to the hotels, restaurants, FMCG industry. We are invested in LTTS, which is an engineering R&D company. We've been invested in for a long time. We've increased our position in recent weeks.